So let's talk about the reason that your monthly mortgage payment may go up this year. And it is because of property taxes. And so let's break this down. So first of all, quick overview or quick reminder. So property taxes are determined by this equation. So you have the actual value of your home. Now this is going to be different than market value. Market value is a value that a home has on an open market that you're selling. There's different factors that play into that. Actual value is given by the county. So it's the actual value multiplied by the assessment rate. The assessment rate is determined by the state, and it can fluctuate each year. Then it's multiplied by the mill levy. The mill levy is what makes up your property taxes, meaning, or what they're comprised of. So this is everything that you're paying for in your community. So this could be things for your neighborhood specifically, for your municipality specifically, things like fire service, schools, anything that you might have voted on that you're supporting in your local government. So this can also change. Divided by 1,000 is how you get your property taxes. So you see here this example. If you have a $500,000 home, you multiply it by the assessment rate and you get the assessed value. That is then multiplied by this mill levy divided by 1,000, and it gets us to this number. So this is just an example. So that's how property taxes are determined. So as you can see, they fluctuate. So we know that 2023, our property values were reassessed. And so if you look here, and if you were like most folks, your value of your home went up, and it might have went up pretty substantially. We saw a pretty big increase in property values, partly because of what the market had done in the last few years. So let's say in 2022, your home was valued at $500,000, and then you saw a $100,000 increase. So in 2023, it was then $600,000. That increase in $100,000 or whatever it is for your specific home is then going to affect this equation, right? It's also going to be affected if the mill levy changed at all and with the assessment rate. So this whole equation likely changed for you. But the big thing to remember, or the big important thing about it, is how much property values increased. Okay, so let's talk about your monthly mortgage payment. So your monthly mortgage payment is made up of three things. So it's your principal and interest, and then your insurance and your property taxes. So you pay each month into an escrow account that holds money for both your insurance and your taxes. Your lender then pays your property taxes and your insurance on your behalf each year. Taxes are paid in arrears, meaning 2023's taxes will be paid this year. And they're based on the previous year's equation. So if we break that down, let's say 2022's taxes were $2,000. So each month you were paying a 1/12 of that was then going into your escrow account. So for this example, that's about $167. So the lender turns around in this spring and pays your 2023's taxes. Well, they're looking at 2022's taxes, which was $2,000, when in reality, now yours have gone up to $3,000, for example. Well, that leaves us with a $1,000 shortage. So your lender's then going to do an escrow analysis to account for that shortage and may increase and the increase in taxes. And by the way, your insurance premium fluctuates also. And so that could also have an impact on your monthly payment as well. So after they've done that analysis, that's where we land today. So because we've seen such a large jump in property values, and honestly, we've probably seen an increase in insurance premiums as well, your monthly payment is likely to go up to account for this new tax amount. So you'll likely be getting a notice from your lender explaining just this. Now, the other thing to consider with this is your monthly payment might go up double. Not the entire thing, but your escrow account could increase quite a bit. And this is to account, yes, you're having to account for the new tax amount, but you're also having to account for the shortage of not collecting enough over the last year. So just to kind of reiterate that, so for 2023, we knew that property values went up, but your payment did not go up. So you were paying that same amount through the year, only to get to this shortage when we go in 2024 to pay those taxes. Sometimes lenders will also give you a lump sum option for the deficit. So if we go back to this example for this $1,000, they'll say, look, you can pay this and then keep your monthly payment just at this slightly escalated amount rather than having to spread out this lump sum into your monthly payment. Now, this can get confusing and convoluted pretty quickly. So if you have questions or you'd like me to look at yours specifically, I'm more than happy to. I can show you how to calculate what your monthly payment will likely be based on the new assessment rate, if there was a change in your mill levy and what your value is. I'm happy to do it for you. I'm happy to share my tools with you, whatever might be most helpful. So just let me know if you have any questions.